Good afternoon and welcome to GrainTV. It's April 22nd, 2013. To my left is Logan Burgess and I'm Brock Shimbano. We had another negative day in Chicago today. Let's turn over to the fire tip to see how we ended. Corn was down 6 1/4 cents. Soybeans for May were down 11 cents. Wheat in Chicago off 6 3/4, and Kansas City was off 6 1/2. You know, Logan, it seemed like in the last couple of sessions last week we were really building in a weather premium due to some planting progress that really hasn't been moving very quickly. But today it seemed like some of that premium was sucked back out of the market as we saw better weather coming up here in about a week.
Yeah, absolutely. Some of the outlook right now for weather across the grain belt did start to look more favorable. It seems like that was weighing on those new crop contracts in particular today. And we're certainly going to need to see some weather planting window here present itself. We just got the USDA crop progress report. The USDA is reporting 4% of this corn crop planted. That's only up 2% here week over week. And if we take a look at some key corn growing states right now, we see Illinois and Indiana both reporting only 1% planted. That compares to 56 and 43% at this week last year. If we take a look at Iowa and Minnesota, both 0% planted. As we know, west of the Mississippi, things remain very cold right now. East of the Mississippi, flooding's really slowed things down. So in general, a very different planting season than we saw last year.
Yeah, you know, and I think it is starting to become a little bit more of a concern as we head further in time here, but we do still have some time to make up some critical ground. You know, the money that's been spent on new technology, new equipment over the last couple of years, I think really if we do get a substantial window of time where we could get some of this crop planted, I think we will be able to catch up rather quickly.
Yeah, you know, certainly time still does remain, but it really is going to be critical here over the next couple of weeks that we start to pick up serious pace. Let's take a look here at the model that we're going to be tracking throughout planting season here. As you can see, the red bars here are planting progress from this year. The black line is the 10-year average, and the green line is the pace that we saw in 2012. So as you can see here, well behind the 10-year average, well behind the pace that we observed in 2012. But the key area that we're kind of watching here is this middle of May report here. Basically, we found that there's a pretty good correlation between the percentage of this corn crop planted in that middle of May report and final acreage. So as you can see here, we have some benchmarks that we're going to be following here throughout planting season. We'll keep you updated that here on GrainTV, but you can see that over the next 2 or 3 weeks here, it's going to be really critical that a planting window does present itself and we're able to get this crop into the ground.
Yeah, it looks very critical at this point. You know, we're going to need about a solid 7 or 10 days where they can get some field work done, get us caught up. I think that bottom line there is about 40%, so that's kind of the area we need to be watching right now.
Yeah, you know, Brock, we did also get out export inspections today. What did you kind of see in that report? Was that really weighing on these markets at all as well?
You know, I was looking at the numbers right before we came on the air today. The numbers look very similar to what they were last week. Pretty poor for soybeans, about on par with expectations for corn, and for wheat was at the high end of expectations. If we actually take a look at the numbers, corn came in at about 12 million bushels exported last week. Expectations were 10 to 15, so right in the middle there. Wheat was about 24 million bushels. High end of expectations was 25, and soybeans came in at just about 5 million bushels, so right at the low end of expectations. But if we take a look at these models that we've been following all marketing year long, this soybean model here, you can see the green line is what we need to be seeing for weekly exports to meet the current USDA projections. That last red bar there is what we did see last week. So you can see once again, 2 weeks in a row we fell pretty far behind on what we needed to see. But for the year, we're still running about 112 million bushels ahead of pace. A little bit of a different story for wheat exports over the last 7 to 10 weeks or so, outstripping that seasonal pace to meet the current USDA projections, and we actually sit about 19 million bushels ahead of pace to meet the current USDA projections. So, like I said, pretty similar to last week. You know, low end of expectations for soybeans. Corn came in right within expectations, and wheat was on the high end of expectations.
Right, you know, so today's report, not a lot there for fundamental traders to really go on. Coming down the pipe this week, we are going to be getting EIA ethanol numbers out on Wednesday. Export sales reported Thursday, but it's kind of my sense that here over the next couple week or so, especially for those new crop contracts, people are really going to be watching the weather closely. It seems like we saw that today in the trade that was reflected in the grain market, but we'll keep you posted on expectations for the weather outlook and fundamental factors here on the demand side on GrainTV here. But in general, you know, Brock, I think that's kind of what we saw here for a Monday in the grain market. If you guys want to take a no-obligation trial of the trading platform that we use here on GrainTV, visit us over at grainhedge.com or give us a call, 877-472-4607. Thanks a lot for joining us. Have a good night. We'll see you tomorrow.